Hello everyone, welcome back to the channel, Best Place for Long-Term Stock Investors. This week we're going to talk about several important things. Number one, EPF, right? You're probably watching this who also have EPF. And we're going to talk a little bit about SMTrack's recent pump as well as AirAsia's recent dump. As a disclaimer, we do not own any shares of SMTrack or AirAsia. And if you want investment advice, please seek a professional.
So Project Small episode 4 is coming to you. It's going to be held on the 20th of January, this Thursday. And we're going to cover 3 companies as usual: Cycle, Cam, and Surya. Pretty queer company, but something to whet your appetite. So I'll see you guys on the 20th, and the registration is in the comment section below.
Okay, John, so there's a bit of a mini kerfuffle happening in EPF. It's mini because I believe you were telling me before the recording that some of this not even reported on the Edge, right?
Yeah, I think the EPF one was widely reported. I was asking you for the cover story, MJ, but I think there's this kerfuffle, like what you said, kerfuffle because of COVID as well as the flood.
And so I think the issue now is that whether the government or EPF should allow withdrawals.
Yes.
And I think on one side, if I can summarize, is that so this is Tengku Zafrul's side, right?
Yeah.
This will jeopardize the economic system because when you open the floodgates, then what are the criteria? People try to game the system.
Correct.
And EPF, as well developed as it is,
yes,
may not be able to withstand the outflow. But then on the other side, it's people who are suffering, people, whether it's the flood in Malacca or KL or wherever.
Correct.
And people who have been hit hard by COVID, their businesses and their jobs that need the capital.
That's right.
So did I summarize the current tug of war correctly?
Yeah, I think on one hand, because the floodgates had opened before MJ, people, I see.
Are you referring to the ICINA?
The ICINA, the ICITRA, and all that. That was the first time in history actually EPF allowed withdrawals.
Yep.
It was a crisis. Tengku Zafrul being a technocrat, probably he did not felt that political pressure. He wasn't too keen, but in a way he agreed because it's once in a lifetime kind of thing. But because of that, I think he is putting his foot down against a lot of people, especially right now. UMNO Youth is really calling for the withdrawal again. His logic is very simple. While we're kicking the can down the road, if even a flood warrants a withdrawal, then what if another flood? It's the COVID, he tried to differentiate the COVID scenario and the flood. Because they were arguing that the flood also caused misery, but I said, hey, hello, Kelantan floods every year. So every year Kelantan floods, that means every year withdraw, man. And I guess we won't talk about the stats. I think you and I know, a lot of our listeners, I'm pretty sure, follow the sob stories that EPF holders, 50% or 55% actually don't even have 10K and all that. Yep. So I think Tengku Zafrul's point is, are we kicking the can down the road so far that the economic balance or the burden of these retarees are going to be borne by the future generation?
Right.
I think that's his biggest worry. The second part, which I felt, this was what I shared with you earlier before, was this was not even reported in the main press. I kind of picked it up from my Google feed, and I thought it was very important news because my whole family are civil servants except for me. Okay. And both my dad and my mom are pensioners. I'm pretty sure some of the listeners are also on pension. So you know that you at pension, you get half of your salary at your retirement, okay, right, for the rest of your life. And it is actually half of your salary at your salary bracket when you retired.
Last drawn salary.
Last drawn salary, right? In 2013, from what I read, it was very scarce information. I tried to Google more, but I couldn't really find. They're introducing a new scheme where the pension, the rate of increment is actually capped at apparently 2%, which apparently is worse off than the previous pension scheme. So I do not know whether 2% starts off the increment from the first drawn salary all the way 2%, 2%. That means regardless of what salary bracket you end up with, the 2% just continues on. Let's say if you work for 25 years or 30 years for the civil service, it's 2% flat rate all the way. And then that's the maximum you can withdraw from your pension.
Yep.
Right? My guess is that lah. I haven't found any information to validate it or to dispel that. But what these civil servants are doing is they're actually taking the government to court to say that, hey, this is worse off than my pension scheme that I signed up to the civil service for. So if you look at it, I'm very sure it's taking a burden on the government because 700 million.
Yeah, for sure.
A month. I'm not kidding you. So, and there's 700,000 government retirees nationwide, my parents included, okay? They were lucky because they had the blend of EPF and pension. So they had some EPF, they had some. But those who are really relying on pension, wow. Yeah.
That's tough, man.
That's tough.
Really, really tough.
Yeah, so I'm not going to go just into the stop story, MJ. I'm just, the next part of it is actually trying to say, are there solutions being thought through or come up with to actually alleviate all this? We know Malaysians, while we are savers, we don't have enough for retirement. Yeah, we know that. But what are the solutions? What are the potential, sandboxes or trials that we can? I thought this was pretty cool, MJ. Chagamas. So they're the National Mortgage Corporation. They're actually allowing retirees, if you fully paid up your home, you can actually take a loan against your home to finance something like an annuity. So your home is actually your collateral. They will offer you a loan at a fixed financing rate of 5% a year, which is about 1% lower than BLR right now. Okay. And then one-time recourse fee. So the loan is actually meant as something like your annuity plan or your EPF.
And then at the end of the loan, the house will belong to the bank.
Correct.
Right? So then the bank will auction it off.
Yeah, the Chagamas in this case.
Yep.
And I think it's good because, you see, I feel a lot of, especially the retirees, they don't want to take risks. But what's the biggest asset? The biggest asset is actually the home.
Yeah.
And as a financial planner before, and current, I'm not a licensed financial planner, but I went through that training. But more importantly, one of the statistics that scared me or shocked me was actually, do you know we have 60 billion of unclaimed assets or unclaimed monies? That means people pass on, they don't have a proper estate planning, will and whatever. It's just left there. And I think this kind of like, for me, helps solve things in a way that now Chagamas has these assets, I collateralize it, I give you loans so that you, in a way, the retirees have some kind of an income. And then it becomes kind of state-owned or national-owned that they can sell off again.
I don't know if you know the math about this, but my quick calculations is that at the beginning, when basically what you're doing is you're drawing down equity from your house as income, right?
Correct.
Until you die. So let's say you retire at 55.
Yeah.
Usually you have a 30-year loan, give or take. In this case, it's like a reverse loan. Like that.
Correct.
So you will increase the loan as you approach, let's say 85.
Yeah.
So of course the risk is if you don't die before 85.
Yeah,
right? That's
correct.
the risk.
Correct.
But if you keep paying down equity, that means towards the end of the loans,
reverse loan,
reverse loan, that means that's when the cost of financing will be the highest, right?
Correct. Yeah.
So that will be interesting because I personally have not seen this work anywhere before.
Yeah.
So I wonder what is the response to people who are proposing this to handle. Because let's say if let's say the retiree has children to support, then usually they won't even need to do this.
Yeah.
But someone will need to do this if they do not have external support.
Or their tertiary family members are away. Or they're living alone. Maybe the kids migrated.
Correct.
Yeah.
So like, let's say if you take out 10K of equity from your home, okay, let's use an annual basis, right? Let's say you are able to take out, let's say your home is 500,000. I think most people's house in the Klang Valley at least is roughly around there.
Yeah.
So throughout 30 years means you can take out 115K a year.
Some 15 at 5%. Yeah, somewhere there.
So that means that's about 1K plus a month. So the first year is not a problem because the principal remaining in the house is still very big.
Correct.
So if you have a fixed interest also, it's not there.
Yeah.
So the question for me is, how are these retirees in their 70s and 80s going to handle the repayment? Because in a normal loan, you pay the most interest when you start the loan,
At the
right?
beginning, correct. And then it gets lower and lower because capital is paid off.
Yes, because the principal is chucked away. Here, the principal is increasing. Sorry, it's reducing.
Reducing.
So the interest will be higher. So I will be interested to know.
I want to look at, actually, it's just open.
Yeah.
And the application place is actually where, you go to the EPF offices. So I'm actually interested to see their table of calculation to see how it works. Because I know especially baby boomers who are already in their 60s, a lot of their kids are not around. And, it's a balance in between you stay in your own house, but you can't actually leverage on the asset.
Yeah.
And it's actually locked up in value. I see this as an interesting proposal. I've not gone and studied other countries whether they implemented it, but I see this as a silver lining in them trying to come up with solutions rather than just lament, the elders don't have enough for retirement, whatever.
Yeah.
Okay, but Singapore is doing well. What they do is they allow, if you go to the food court, do you realize that there are a lot of the elderly that actually work in the food courts and all that? We don't have that kind of incentives or initiatives to actually do that, to try to provide income or source of income for people who are retiring and do not have enough, you see.
Yeah, for sure. I think first of all, Singaporeans are already taken care of the day they are born, right? I mean, the fact that their house is already half of what they should be paying.
Yeah,
that is already a big benefit. Correct. But there are more to.
No, that's it.
All right. All right, guys. So if you're interested in joining our exclusive research team, right now we have like 7 or 8 members, and we're always looking to expand. Send us your best report on a stock. And remember, don't send us just the financials or that. Do give your thoughts on the valuation, the management, the business qualitatives, like how much can it grow, what is the industry dynamics and things like that. And if we like your report, we may consider adding you in the team. Before I move on, also make sure to give us in a Google form or a Google Doc format. You can send it to an email here. Okay, so we move on to SMTrack. This there are famous people involved, and also the price has been moving up quite a lot. So if you move on to the next slide, it's like from
Mount Everest.
I want to say 6 or 7 cents. 6 or 7 cents to 30 cents.
6, so you're probably making 6, probably 5x.
Yes, so we have several individuals. I think this is Tan Sri Lee Kim Yu, who is the chairman, founder / of Country Heights.
Yeah.
And Tan Chun Hua Lim Hua Tat. Yeah, so what do you think of this, man?
To be honest, it just popped out in the feed, right? I found it pretty interesting because first of all, the news came out. The objective of the news was actually the dilution. Maybe you want to explain about the dilution. Yeah,
I mean, I think there was a story. If you go into the next slide, I believe it's there.
Yeah.
No, I don't think so.
No. This one is about why it got the attention, because they're in early stages of negotiation.
I think I didn't put it in. So basically, I think they were like they bought the shares early on, and then suddenly when this thing start converted, they decided to cash out because they got diluted as well, right?
Correct.
So that's the public reasoning given.
Correct.
So what is interesting is that even after this news came out, the price is still at about
30 cents. Right? Yeah.
I find that quite interesting.
And I think it all started, I put this in was because, so what actually happened, what transpired was that if you look, and this way I find reporting very, very funny. Early stages of negotiation, eyeing a GLC eyeing a 10% stake, and then half a century, this GLC was set up more than half a century ago as a wholly owned government company, and some of the investment principles are to invest in assets that bring high economic return. So it's like kind of like you say something, but it's like kind of obvious, right? And then it says, it wrote also when entering into the joint venture, GLC is a majority shareholder with controlling interest, okay? Then prominent Datuk Sri. So for me, right, it sounds like as if the news is just news to prop up, lah, right? Things doesn't talk about the business model, doesn't talk about the monetization, doesn't talk about the economics of it. Nothing.
Yeah.
Right? It's just GLC, 10% stake. For me, lah, that's how, if I were to be as objective as possible, GLC, 10% stake, famous Datuk Sri. When you invest, of course, you want to invest in assets that bring high economic return. It's like, duh. What kind of statement is that, right? So, I went to do some digging on the numbers, MJ. Not been profitable since, and no positive operating cash flow for the past 5 years. So again, RFID is the only thing I know. Monetization, unit economics, question.
At least they're losing less.
They're losing less.
Since
revenue is growing over the past 2 years, 3 years. Yeah. But obviously, we are not in the know. We're not part of the inside circle of this business. But I guess the reason why I think we should take away from this, I mean, for me personally, is that when you read news like this, right, how do you read in between the lines and what are the pertinent information? Rather than just seeing a statement like this, and then that's how you make a decision to buy a company. I think that's what I want to convey to the listeners, lah.
Yeah, totally agree. I think I'm not sure if anyone was asking you about it, but I'm sure people would ask us about it. And they always ask whenever the price moves a lot, they'll ask, what's happening? Yeah. Not much. That's the thing.
Yeah, that's the thing. It's not much.
It's not much is happening, and yet the price is going up. So you make the decision. What do you make of that?
Yeah. So if you like this kind of content and you want to help us in reaching more people, do give us a like, subscribe to our channel, and share with your friends and family, because what we really want is to level and up-level the playing field of retail investors, especially in Malaysia.
Okay, John. So AirAsia, this is something that we've covered
many
before,
times.
many times. So it tanked, right, year to date to about 62 cents. When I did the slides, I think, so this recording is about 60 cents. So it's about 25% down. So why has it happened? Well, they had their PN17 application appeal rejected. So for the first 18 months since the start of COVID, which is roughly, I think, March 2020, they immediately, because of business halting, immediately from a financial perspective, they already qualify as a PN17 company.
I think Bursa, they did a moratorium, right? If I'm not mistaken.
Yeah, so this was the thing.
The moratorium now is ending already, right?
I think it ended and the appeal got rejected.
I see.
Yes, so for 18 months, they were under this moratorium, right? This special status where they are technically PN17, but because COVID is a unique situation, so Bursa allowed them to be outside, within that protection. Yeah. So there's more to this, but I think the two big reasons is that the auditor thinks that as a going concern, AirAsia has what they deem material uncertainty, which is another word for just they just don't know, they just don't see the business. It's not clear to them the profit projections. And then another one is actually that the shareholders' equity, right, is less than the share capital. That means the amount of money that shareholders are in theory due to have in the event of a liquidation is less than the amount of money that shareholders has put into the business. Part of it is because they had to burn a lot of cash. Correct. They had to burn a lot of cash to survive. So if you can, we'll put a link up there. But we actually covered this, I believe, twice, right? In July and another one in October.
I look at the photo, I remember it was during the lockdown. Because we were at home.
Definitely during the lockdown. Yeah. So I did mention that based on how they are raising their money, the loans here, even up to today, they haven't
exercised it. They
haven't decided to get it yet, I believe. In fact, I think they're doing it more, how do I put it, step by step. So
progressively.
I think the latest, based on the latest financials, I think they got about 300 million in terms of borrowing. So I did say that they have 12 or 14 months of runway. So that was in July. So now it's been 6 months. And they have been surviving. They're still surviving. But of course, the auditors are very wary of their scenario. So I do think that the biggest issue with AirAsia, and this is also somewhat of a mystery to me, is actually their revenue. So we don't count the 2021. I know it shows that 2.6 billion looks like way bigger, but because Q3 of 2019 is also Q3 of 2019 and a big chunk of Q1 of 2020. From September 2019 to about February 2020, they generate revenue there.
Because that's still normal periods. That was before the lockdown. Yeah.
Because before COVID, they were making about 10 billion a year, right?
Correct,
so then
correct.
more or less that amounts to that. So if you compare, if you take out about 2.5 billion, which is what you would expect them to get in a normal quarter.
Correct.
In 2020, basically they make about 100 million. So they've actually 5x in a way their business, but it's still there, right? It's still a problem. They still cannot break past that.
And I don't think it's totally their fault as well because of the flight restrictions, international borders not opening up, certain countries. I mean, you remember I went to Penang for a factory visit, right? The flight was full, MJ.
Yeah,
it was full. I'm like, I think people want to travel. It's just that there's so much restrictions now, even for them to generate traffic, right? It's difficult. And I was just telling Rondi, I went a trip to Penang with Rondi. The airport was a car park, aircraft car park lah. Yeah, so
I think the big one is the Malaysia-Singapore one.
Correct.
I think it's
correct
one because they have what's the word?
VTL.
VTL, yeah, VTL.
Yeah.
So I think that is a huge one.
Correct. There used to be easily 10, 15 flights a day.
Yeah.
I don't know how. I've not checked
That's a huge revenue contributor.
Yeah, and I think in the past videos as well, MJ, we've covered that Asia is. I've seen from my opinion, it's done its utmost to reduce costs already.
Yeah.
I think hats off to Tony. I know a lot of people say, it's a lot of PR stunts, it goes cycling, whatever. How many business people actually have that tenacity to go on? I kid you not. He's
So I guess, my closing thoughts would be that really it just hinges on the opening.
Yeah.
That will solve everything really.
Correct.
In terms of financing and all that, I think that you rightly say they've done their best.
Yeah.
And there's really not much else they can do, which is why I'm of the view that I do believe that some extension should be given in terms of their PN70 status, because you are not, I think if you reject them, you are almost like adding fuel to the fire, right?
Correct.
And AirAsia is an important, whether you like the man or not, I think AirAsia is an important group as a company in Malaysia. So you as the government, you don't have to give loans to AirAsia, but you don't have to make it more difficult for the company.
I think it just exacerbates the when you put slap on a PN17, you already know. I mean, if you are an investor, by right, you should understand all the underlyings, what we've just mentioned. Also, the other thing, if I were to look at it from a bigger angle, think about whether other competitors will actually be agile or competitive enough to into their space. Who has a fleet size and a network that rivals them? I don't think anyone. I mean, you talk about Malindo, you talk about even Malaysia Airlines, right? You talk about their network, I don't think in this region they can rival Asia lah. Secondly, is that if things bounce back up, opens, who will be the first with their network to be able to gain advantage of it? It's actually, ironically, it's Asia. Yeah. So I guess it's a catch-22. If you're bullish about the economy opening up early, this could be a potential. But if you think it's all doom and gloom, and you don't think you think this is going to prolong and it's going to take all the way to 2023, then it's a survival whether they can drag lah. I mean, you've calculated, can they survive another 12 months with this kind of expenditure with no revenue?
And look out for Malaysia, Singapore. I think that's the most important.
Correct.
I think once that opens up, I think the auditors will change their mind, which means that they get out of the PN17 status.
Yeah, yeah.
Okay, before we end, we do have a question from Instagram. So this is by That's More Fry. That's More Fry. Okay.
Or that small fry.
Yes.
Cool
So
name.
how do you decide to sell a stock to cut loss or take profit? So I think it's a good question.
What are your thoughts?
Yeah, I think there are several. I think there are three. One is if your thesis is wrong. So maybe you thought that the example I like to give is you buy because, let's say, you think management is good and management is honest. So then the minute you find out that management is not honest, then you sell. So that's one. The second one is if you discover other opportunities that are better. Sometimes when you sell a stock, it doesn't mean that the stock is bad, right? It just means that something else in your estimation is a lot better.
Yeah.
The third one could be that maybe you need the cash, right? Like you need to, you need it for your personal life or whatever.
Correct.
So then you can cut loss or take profit.
Yeah. Actually, the last one, I probably give you an example, and I can't name names. What happened, he was actually a director of this company, and he just needed the money to actually send his kids overseas.
Yeah.
And I keep on joking with this guy. I said, wow, your ESOS option, sure, in Hokkien we say jia bei liao.
Yeah.
He said, no choice. First son go here, second son go here, have to sell. Lor.
Yeah.
No choice. They need money. And the reason why it was even brought up as a discussion was because outside investors, they look at directors selling. What's happening? Is it a bad thing or whatever? They just need the money.
Yeah.
Because they see announcement, right, director? Is it something bad? Is that news that we don't know that we're supposed to sell as well? So
yeah.
Yeah.
I mean, it's the same for I think there was a fourth one would be like what? I think a classic example is EPF, right? So
Yeah.
EPF selling.
Yeah.
So sometimes it's just portfolio rebalancing, right?
Yeah,
Sometimes
exactly.
it's, I think I need to allocate more here and less there. So I'm going to sell here, sell there and then put it more into here.
Yeah.
So that I think is the decision to sell a stock.
More importantly, I think for that small fry, I think it comes back to your own conviction and understanding. Because sometimes you bought a stock, you may have, just throwing out an arbitrary figure, 30% know-how of the company.
Yeah.
But then you discover the value chain, and then let's say, remember, I give an example that both MJ and I we know very well. I actually discovered this company called PR Lexus. Way
Prolexus,
back,
2017, 2018, something like that.
No, earlier, I think 2016.
Okay.
Yeah, 2016. Oh yeah, late 2016, early 2017. So I approached MJ and I said, hey, let's do a research on this. And what we discovered that we found Magnitech was much better. And at that time, we heard of Magnitech, but we didn't dive deeper into the numbers. So let's just say if we were a bit enthusiastic, we bought into PR Lexus. But then when you dig deeper, you understood the value chain better. Then you found Magnitech was better. Then there's no harm selling PR Lexus. So by you diving deeper and building your own conviction, there's no harm to say that, hey, I just move on to a better one. I think it really comes back to your individual conviction and your individual understanding.
100%.
Yeah.
All right, guys, if you enjoyed the video, remember to share with some of your friends, like, comment, subscribe, usual stuff. Follow us on Facebook, Instagram, we have a Telegram channel, Discord as well. And see you in the next video.